Sometimes you're not sure when something will give way. You've got to put it to the test to find its breaking point.
The economic crisis caused stress for many of us. Economies teetered, auto companies were rescued, banks went under or were taken over. What if those stresses return?
The Committee of European Banking Supervisors have been putting its banks under a lot of stress to see if any of them will break under certain hypothetical economic shocks.
These so-called stress tests are a response to the current mood. Banks are afraid to lend. They don't trust the guy on the other side will survive. And there are other concerns.
How much government debt the banks are carrying, and is it Greek debt or German debt that sits on the books?
Then there are all those dodgy property loans floating around. Do banks hold adequate capital in reserve to withstand the stress?
The hope is that banks will be nice to each other once again, and that analysts and rating agencies won't have to guess how healthy a bank is.
But like the banks, the stress tests themselves have been under the microscope.
If the vast majority of the banks pass, the test could be seen as too easy. If many fail, might it do nothing more than scare an already fragile market?
What will European governments be able to offer banks that are too stressed out? Easy mergers, money, or just a spark to help them burn out?
Well, I guess there's no point to the test if there are no consequences for those who fail. Jim Boulden, CNN, London South Bank University.